Everything that we have been doing and preparing for the last 2+ years, it's starting to unravel. This is it, guys. It really is coming. And I'm going to show you in the charts how bad things are going to get. And I'm also going to tell you that I have literally just came home from Barcelona, and the first thing I did was not clean those dirty boxers. It was not that. It was recording this video. That is dedication. What's the crack, everyone? Welcome back to Buy, Hold, Sell. I hope, of course, you're all well. Let's just start it off straight into the charts. The S&P is horrendous. Now, since we've been coming back onto the channel, we said, don't be buying nothing. We're going to wait for this to hit the 200 and we're going to bounce. We hit the 200, we've bounced. Then I said, look, we've just got to see what way it goes. We might hit this area with the 50-day moving average. It might go test resistance, but ultimately it was going to come down to big tech earnings. The big one that we talked about last week was Tesla, Elon Musk, the dream. We're not going to get into the earnings breakdown, but the summary of that report was things were strong. However, bearish times ahead, gloomy times ahead. Earnings since that, the likes of Alphabet yesterday sinking like a fucking stone. Microsoft being the only exception. For a few weeks ago, we covered the sort of top 7 stocks, the Magnificent 7, I think it's called. FANG stocks, they used to be called. It doesn't really matter. Point is, what they are is the biggest weighted stocks in the S&P 500. For example, the Apple is around 11 to 13% of the entire S&P 500. That is 500 companies, and out of 100%, the Apple stock counts for over 1/10 of that. You can imagine how much Alphabet, which is Google, Meta, Tesla, all them combined. We're talking the big players. If they go down, it all goes down. Apple's the one, guys. Apple's the one. If that goes bearish and gapes out, it's over. Buckle up, strap up, board up the houses, get rid of the kids. No, don't get rid of the kids. Keep the kids. Keep the kids. Don't get rid of the kids. Go into hibernation. Get the bomb shelter. I mean, seriously, it's going to be horrendous. But we're ready, so it's good, and you can make money on the way down. So what we talked about on the S&P was big tech earnings. If it's gapey, it's going to go hard. That's what's happened, and we have seen, since we last covered the video, we have seen it fall 3.6% on the S&P. For an indice, that's huge. But what's huge here is, for those that know, will know, we have now fell below the 200-day moving average. That means bear market. We're back in a bear market. The last time we were in a bear market, we did get this little fake out bear run. What I'm going to look at now is the weekly. How are we doing? How's the weekly always looked? Well, if you strip it out, the weekly, generally speaking, is always held. It's always held. Now, we did have this period of time when the whole situation happened. We did go down, but we didn't last too long. After about a month, we were back. The real time that you want to go back to and look at and see, well, when did this really go hard? And when was it really doom and gloom? Well, everyone should know 2008 was realistically the last massive, huge crash. And that happened in 2008. We did fall below on the weekly, and it just sunk. It sunk really hard, 50%. This is the stuff we've been preparing for a reason. When it fell below here, where did it go? 40%. That was in 2000, the dot-com bubble. These are things that people remember. These are things that are arched in people's memories forever. Then we had the glorious 70s. Don't forget about that, 40%. Then we had the roaring 30s, the good old days, 80%. And then all around this wartime period, it was just, I've got nothing left. This has been one hell of a good bull run, 13 years. Cycles end. Look at other videos that we've covered on the channel. Look at other videos just in general. Google it yourself. Whatever you have to do. Understand that things come in cycles. 60s was 50%. 80s was 34%. 2000, when that dot-com bubble happened, it was at 55%. We are at 125% now. That's just not sustainable. It's just as simple as that. USA mortgage rates soared to the highest more than 23 years. You think about it. How in blue hell, how can anybody survive when rates are at the highest point that they have been in over 23 years? 30-year treasury yield jumps back above 5%. The S&P historically, as we always cover on the channel, and we talk about, for those people like the dollar cost average, I'm a swing trader. That's predominantly what I like to do. Apart from my odd individual stocks, I like to pick sort of risky, all in, on the dream, risk everything, might lose it all. Those types of stocks. And then I like to swing trade. Swing trades could last for a month. They could last for 6 months. It just really depends. That's the glorious thing about swing trades. We just let the charts decide. But with long holding, you'll watch a lot of people go, swing trading stupid, technical analysis, it means nothing, people don't do it. Well, I'll just show you something, right? 10% on average is what you get. Well, let's just have a look. If you bought back at the start of April 21 and you went, right, putting my money in, I'm going to hold for my 10%, I'll be up 30% in nearly 3 years' time. I can't wait for this. Well, no, actually, in fact, you won't be. And I dare say you'll find that you'll be down over the next 6 months, which is just incredible for people to understand. And the thing is, you think about smart money, and I talk about smart money, I talk about the fund managers, the head managers. What are they doing right now? Are they investing in stocks? No, they're closing up everything. They're moving all their money into high interest rated bonds. Why? Because bonds can get you upwards of 5 to 6% right now. So if you can guarantee money, 6%, why would you even try to play this market, especially now we went back into a bear market? Put your money in safe havens, put your money in savings. Now is the time to be doing that. In our savings account section, we talk about the savings accounts that can get you upwards of 5%. Guaranteed. Put some of your money in there, better off than going near this absolute disaster of a market right now. If this falls below this, so you're talking sort of another 3.6, which we just done in the last week. If this falls, all bets are off. It is game over. Look at the RSI, look at the MACD. Those are in the trading course, know what we're talking, what we're looking for. This will bounce. It will definitely bounce in amongst this, as it always does. But if this finds itself down over this in, say, the next 2-3 weeks, this is the current heat map for the moment right now. As you can see, it is brutal out there. Microsoft leading the way after strong earnings, although it was up like 6%, it is now over 3%. On the last week, Microsoft's done well, but look at some of these big boys. Google down over 8%, Amazon, Tesla over 10%. Unsustainable. Even Apple down 2%. Now you will ask, well, how do you make money in this market? Well, what you do to make money in this market is you swing trade as best you can. You keep your assets tight, still keep in your long holds, but learn how to time your long holds. Like I said, I wouldn't be buying any long holds right now. I'd just be sitting tight. The safe haven is another indication that things are getting into really hard times. People are moving their money into gold. I have a gold ETF and I've had it for a long while. It is a nice hedge. I'm going to do this now and we'll monitor this over the time. So please like, subscribe. Let's see how accurate RTA comes out. I still think you'll find Apple go down around these levels. And if you do see that, you're looking at around 50% drop. So if you're looking for some bullish news, the NASDAQ thankfully isn't as pulled back as much as the rest of them, mostly because the NASDAQ stocks have taken an absolute pounding. That most of these companies now are priced for bankruptcy. Sectors and industries struggle at resistance. You can really see here technology, industrial, semiconductors. Look at this. They're all bouncing off this resistance. Dollar's getting stronger. It also pulls down. We've covered that to death on the channel. Dollar goes up, stocks go down, and vice versa. Just to summarize, I do think we're going into really, really hard times. Everything we've been covering on the channel for about the last 2 years, I really think now is potentially going to play out. We could get this final bounce still. It's still a possibility. We'll be watching the weekly chart closely, but if that closes down below, then I fully expect the world just to end. The pain is going to be horrendous. A lot of people are up to their eyeballs in debt. They're going to come into high rate mortgage payments that they're not going to be able to afford. They've taken out the car loans. They've got the credit cards maxed out. These things are now over 30% interest. People just do not realize how much they were on the breadline and thought, well, I could survive with this. It's not going to happen. I feel sorry for a lot of people. They're going to lose a lot of jobs due to AI. Amazon have increased their robotics. They're looking at the infrastructure of AI to get rid of all warehouse staffs. We've got self-driving cars and vehicles and lorries coming. There's so much stuff that is coming over the next 10 years. It is just going to completely transform the world that we live in. I don't think it's a necessarily something to be worried about. There's a lot of people out there that are scaremongering, saying, you know, this is terrible. I think it's terrible if you don't know how to prepare for it. I think that's why you've got to prepare for it. And you know, and if you don't know what you're doing in terms of investing, I would highly recommend, obviously, the trading course. It's £100 of your money. It's an absolute steal. Where it's so cheap because we're trying to teach people more so than anything. We're still running. Anybody under the age of 21 can get free access. I want as many people to be prepared and as many people to have opportunities that I never had in 2008. It really set me back. You have to work hard at things. You have to protect your money at all times. Get ahead of the curve. Don't listen to the media. The media is always behind the curve. And it's too little too late by the time the media get around to it. There's obviously agendas there. Do your own due diligence. Don't take my word for it. Check out, just open your eyes to other sources of media and do your own due diligence at all times. You'll be fine. We've covered different tips and tricks, and I do think there'll be a lot of unrest, and if you can get out of the cities and all of this crazy, really dark stuff. But if you go back and look at depressions and times, there's a lot of similar stuff that we're seeing that unfortunately you just can't really talk about on the YouTube. Consider getting in the Discord, consider buying the trading course and learning this. But failing that, just look out for yourself, look out for your family, make sure you've got money to the side. And you will be fine. Just don't bury your head in the sand and just try to move with the times. Going to start doing live streams. We're going to really ramp this up. It's going to get scary, but we'll be fine and we're going to get through it. And yes, enjoy the rest of your day. Peace.